Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. It is Monday, a very interesting Monday today, as you probably have heard. I don't know if you've heard this yet, but it looks as if Elon Musk has successfully purchased. Elon Musk has successfully purchased Twitter. At least that's what it looks like. Right now, and it's very interesting because I expect a lot of there's going to be a lot of wringing of hands here, but it looks as if Elon Musk has successfully bought Twitter. So very, very interesting thing going on. Apparently, he lined up $46.5 billion in financing. Now, he only paid I say only 40. I think it's 44 billion, which was basically the original offer. At least that's what I'm hearing. I'm not sure if it's exactly right, but that is basically kind of where it seems to be. So very, very interesting. Who knows what's going to happen with Twitter, but it does look like, according to what I have seen, and again, I'm just trying to figure it out as much as anybody else, of course, and that is, it just seems like, it seems like a very interesting thing. Apparently, this is his tweet that I'm showing here. He basically, he's saying, and I don't know if this is disingenuous or not, but he's hoping that his worst critics are going to stay on Twitter because he's committed to free speech. So that's what he's saying. So very, very interesting thing going on here with Twitter. I think there's going to be a lot of people that are going to jump up and down and get very, very angry. I think already Bill Gates is kind of in a twit a little bit there, and I think, quite frankly, Facebook could have some issues regarding this. Who knows? I mean, I certainly don't know, but apparently, what's going to happen is they're going to open up the algorithms, the search algorithms, and to everybody. It's going to be like open source, and this could be very, very interesting because, I can remember. I'm old enough to remember when Windows was dominant. And the open source movement came along with Linux. I mean, Linux basically was a free operating system that mimicked Unix, and it was given away free. And it basically created a revolution in the internet space. I mean, all the servers are run on Linux these days. So, very interesting thing. I don't know if the same thing could happen in terms of the free speech space, but if the algorithms are opened, I think that this thing could explode. I mean, this could literally eat the lunch of, even Google and companies like that, because, if it's open, then everybody is going to rush to build add-ons to this. That's what I'm thinking. If they open up the API on this, so I don't know. I mean, I'm not an expert, but this could be a very, very interesting thing, a very interesting event. Just wanted to show you basically the chart of Twitter. Now, it had been in a downward trend, and then, basically when, as you can see, when Elon made the offer, it jumped up to that 40-day line, and then it's come back up to it. Now, after hours, it closed at 51.03. So the bid was at 54. So the question is, I mean, will it come up? Will it come up? Now, it's going to stop trading it's going to stop trading as a stock company, and it's going to go private. So, that's going to happen. Who knows what the time frame on that is going to be, but it's going to be very, very interesting. I suspect that we're going to see, we may see weakness in some of the other stocks. Matter of fact, I kind of want to look, just for fun, I haven't really looked at this, at how Facebook is doing on this news, because the way I see it, and again, I'm just looking at it, but I think that Facebook may get a lot of potential competition here, and of course, Facebook, as you can see, Meta. Let's see if I can bring that. Let me see if I can. I can bring that screen up for you. It's been in a downward trend since for a while there. So let's see if I can show you, Facebook. But Facebook, as you can see, it's been in a downward trend. And this, now it did pop up a little bit, but after hours, Facebook is down. So the question is, with this new acquisition that Elon has of Twitter, this might be This might be very, very negative for Facebook going forward, and it definitely seems to be showing on the chart. I'm going to look at the 10-minute chart to see kind of what the reaction is. But no, it does appear it traded up a little bit at the end of the day. So who knows what's going to happen here? But very, very interesting in terms of that. By the way, everybody, we are currently, and this is not a good thing, but we are currently in a we're currently in a downward trend. We just moved from a uptrend under pressure to a downward trend. And let me just let's see if I can put that up here. Let's see if I can put that up here. We're currently in let's relaunch those charts, and let's go to let's go to the Nasdaq here. And hopefully we're going to get a feed here pretty quick. Yeah, there's the Nasdaq Composite. So let's take a look at the Nasdaq Composite here. See if we can get that up. There we go. All right. So with the Nasdaq Composite, you can see we're looking at the 10-minute chart, but as you can see, the Nasdaq Composite has come. Basically, it's been coming down significantly. It was up a little bit at the end of the day, but I do think this is a dead cat bounce, and I do think that we're now looking at the Nasdaq going lower. So this is a very interesting development. There's been a big sell-off in tech. Now we did have a bounce today. It came right up to the $1,300 levels. You can see right there, it bounced. But I do think that this is basically, we're going to, by the end of the week, I think this is going to be likely lower. So that's just another thing I want to kind of point out to everybody out there. Also, I wanted to show you a very interesting trade that I just put on today. It's a bear put spread on Disney, and Disney was up a little bit today. But what I did is I created a I created a bear put spread. Now the first quarter, Disney had some good earnings, and it's been moving fairly well. But I do think Disney, like many of the other stocks, is likely to move lower, and this is because of the market direction. Here is a chart of here's a chart of Disney, and as you can see, since way back here in October of last year, Disney has been on a downward spiral, and because I think I don't think that their problems are over with. Now Disney Plus has been very successful. But overall, the streaming business is starting to lose steam, and I do see Disney moving lower. The way this trade works, by the way, if you're interested, is that that's a Twitter screen. The way this trade works is basically today I sold the May 20th 110 put, and then I simultaneously bought the 115 put. Now, so if Disney moves lower, as you can see, this will come in to the money here. Now, today we were at 117.81. Now, it did trade up by the end of the day. Disney did trade up to 120, and it's up a little bit after hours. So what I'm hoping is that it will readjust itself, and then it will continue its movement down. If that's the case, then this trade should pay out quite nicely. What I'm expecting on this one is basically a return of about $670 for a risk of $330. So it's a little bit better than a 2-to-1 risk on this one. This, of course, is if the price of Disney falls basically to 110, and I think that there's a fairly good likelihood that by May 20th that it can be the case. So it would have to fall basically down to about here, there we go, about 110, as you can see. So not that far to go in terms in a month to fall to that level. So hopefully this will work. And by the way, if you're interested in this trade, you can take a look at it super duper easy to do. Just go to www Dallas Trading Floor, and it's the second button. Just punch that button and enter the information, and you'll get a look-see at that trade. And by the way, so you can definitely take a look at that trade. Of course, if you're on the Action Trade Alerts, I'm going to be trying to put out something on this as well as we go forward there. All right, let's see a few more things, and then we'll get into everybody's questions. Let's see, that's that trade. Let's go to the next slide here. Basically, this is what's happening at the very end of the day. The market did trade up. We're positive on the Dow, we're positive on the S&P 500, and we're positive on the Nasdaq, which is definitely a good thing. Now, unfortunately, on Friday, I got kind of taken. It took the wind out of my sails, definitely, and the market went into correction. So what I did on Friday is I took the profits on the profit where I had them. Then I went to cash, and I'm almost totally in cash. I'll show you that in just a second. I build my watch list, and then I'm getting ready to short. Now, my first short is going to be this Disney bear put spread. So hopefully this will work. Here's the condition of the small portfolio. Not very good, I'm telling you that. We've lost on both the things that are in it. As you can see, I'm only in two things currently. American Homes for Rent, that's a REIT, and I'm only up. I'm down on that one in 12 days. Unfortunately, I've got 10 days to earnings on that one. So we will make an evaluation at the end of the week. If we're up, we'll probably. If we're not up 10%, we'll probably be selling this one. And the same with Novo Nordisk. This is a insulin maker, and it's one of the biggest in the world. But everything else has been sold off. So not fun. I got stopped out of a lot of positions. Basically, I'm only in three stocks. One is America Homes for Rent. This is the REIT, of course, that owns the single-family homes, about 57,000 of them. That was down a little bit today. Rexar, this is the Industrial Realty Trust. This owns basically distribution warehouses in Southern California. I'm up a little bit on that one, and then I'm up on Novo Nordisk today, but just basically terrible. I'm mostly in cash, and that's sort of mostly how it's looking. So I'm mostly in cash right now, and it's just one of those things. So let's get to your questions. Thanks for holding on. Let me yammer on here. So let's go to Justin. Thanks, Justin. What's the best level to buy a put spread based on the chart? Well, that's a good question. Here's kind of what I do when I'm doing that on a put spread. I'm going to show you the Disney chart here. Oh, there we go. I'm going to show you the Disney chart here. I'm going to go to the daily, and I'm going to look at sort of the trend. The first thing you do is to figure out what the trend is. And on the Disney chart, you can definitely do that by drawing this temporary line going from the highs here. And this kind of gives you the slope of the slope. Now, currently, I expect this to trade up, trying to the 10-day line, and then I expect it to move lower. So in the next few days, I kind of expect Disney to trade up, but then once it reaches, I would say about 122, 123, I think it's going to reverse and go lower. And then once it starts to go lower, it will make a new low. So what I'm going to do is I'm going to draw a line here, and this kind of gives you the slope of what I'm looking at. Now, I'm looking at about a month out, so I'm looking at a potential. I'm looking at a potential price of about 110 on this on this Disney trade. So if we were to go back to the spread that I have, looking at about a 110 level at the end of the trade, you can see if I would make all the money if Disney is at or below 110 by May 20th. Now, so what I'm doing is I'm looking at the chart, and I'm looking at kind of what is the slope of the lower lows. Okay, so this is the lower low. So I kind of expect it to be around 110. So that's the reason for this trade. That's why I'm doing this trade where I am selling the May 20th 110 put, and then I'm simultaneously buying the 115. So what I'm looking at is I'm trying to get it so that as it moves from 115 down to 110, that's where I'm going to be in the money. Now, when I opened it today, I was slightly in the money, but it did close a little bit higher, so I'm slightly out of the money now. But as you can see, as it moves closer, I expect there to be this downward trend in Disney. So that's the reason why I put this. That's the reason why I put this trade out there. I expect Disney in about 30 days to be in about the 110 range. Now, I can make money as long as it's below 115. So 115 to 110 is where I make the money on this particular trade. So that's kind of how I do it in terms of putting together a bear spread. But thank you very much for the question. Jim, is it a good time to own transport stocks? Well, that's a very good question. Thank you for asking that question. What I want to show you is I want to show you a chart of where the transport stocks are in relationship to the other stocks. Now, I don't think it's a good time to be owning transport stocks. And let me show you why I think that. And so what I'm going to do here is I'm going to show you, well, let's see if I can get the right chart here. Let's see if I can get the right chart. So let's see. I'm gonna there we go. And so I'm gonna go ahead and share out the chart that I have. This is the heat chart, by the way, that I have for the entire stock market. Now, if we look at this, the top performing area of the market currently is agricultural chemicals. So let's kind of see where on this chart we're going to see some transportation. Well, if we go down basically to number 17, we can see that it's there. So ship transport is still doing well, but if you'll notice, the other ones aren't. The truck and all that, they've fallen. So right now, you possibly could stay in this, but I wouldn't recommend buying into it now. The entire market, unfortunately, has taken a leg down. So I would not buy here, and I would not buy for a dividend. Now, if you're looking for a dividend, the place to be in the market right now is in the REITs, the real estate investment trust. That's really where you want to look for the dividends, and they have been doing fairly well. That's the reason why I own two REITs, America Homes for Rent, and then I also own Rexar as well. So that's where you probably should be looking if you're looking for a dividend. And right now, I don't really recommend buying in this market because we've moved into a downtrend. And when you move into a downtrend, it's not a good idea to be long stocks. So it's like catching a falling knife, okay? So we don't want to do that. So really what I would recommend doing is if you're in some of these stocks and they're doing well, keep them. But I would not add to my positions now that we have moved into a correction. Currently, the market is in a correction, and that's very tough because when you're in a correction, really all you can do is sit on your hands and build your watch list or short stocks. Now, at the end of Friday, I was left basically with 3 stocks because everything else was stopped out. Because my strategy is to buy a stock, let it go up, move the stop loss up. But when it pulls back and sells out, that's where I stop. I just stop me in tracks. So I only have 3 stocks right now. So right now, I don't think it's the best idea to be in transport stocks right now because you're going to lose some money. Wait for a follow-through day. Wait until the market bottoms, and this may take as long. This could take several months. It's not a good time though to be long stocks right now, as the market has been in correction. If you watch this channel, I will indicate when the market has turned up because we've had a follow-through day. But right now, and I know this is very hard, the best thing to do is not to be in any things right now or be short things because right now is not a time. It is not an optimal time, unfortunately. Hey, thank you, man. Let's see. Okay. Let's go there. Let's see. Can you please look at WSCH? Let's look at that. Let's look at the stock right now, and let's analyze that chart. And that is SWCH. Hopefully it'll let me. SWCH on. This is Swatch. I haven't seen Swatch in years. The Swiss watch company. Well, it definitely looks like a pretty good chart. It's definitely moving upwards. That's for sure. And it's got a relative strength of 97. Definitely you got to like that. I mean, these are all good signs there. But it's extended above the buy zone. The correct buy point for this on a cup with handle basis is 27.15. So currently we're above that, but we're right at the 21-day line. I suspect you could make a case for buying the stock, but I probably wouldn't in the overall condition of the market. Right now, the market is in a downward trend. So even though this stock is doing better, I would be very, very careful. So here's the thing about Swatch right now, based on what I'm looking at. You know, Swatch SWCH is a good stock in a bad market. And it is extended. So here's the issue when you're dealing with something like that, is that, you know, Swatch is a good stock, absolutely a good stock. It's got a high relative strength. The relative strength line is moving up. Things are looking good for it, but it is extended. Right now, it's 13% above its pivot, which was basically 25 days ago. So the stock is extended right now, and probably I would not buy it at this level. I would watch this one. It's a good stock, but I wouldn't buy it. Part of the issue here is that it says that it's in the internet networking group, which is kind of interesting, but that's 118 out of 197. So if we were to look at this area of the market, if we were to look at the area of the market that this is in, it probably would not be in an area of the market that would particularly work. So let's take a look at this 118 area. It's way down here. Let's see if I can get that 118. Yeah, there we go. Okay, so no, yeah, currently this SWCH switch is in this category right here, and as you can see by the fact this is orange, this area of the market is not doing very well. This is the bottom of the market is 197, so this is basically in the bottom quartile of all of the stocks. So I wouldn't want to be buying here. I wouldn't want to be buying here because the trend, if you can see, not only is it in the lower part of the market, but the trend by looking at the spark light is down. So I just couldn't in good conscience recommend buying the stock. It just, unfortunately, it's a good stock, but it's in the wrong neighborhood. And that's a very, very tough place for it to be. But I appreciate very much bringing it out. Where's the ceiling of the QQQ short term? Big earnings coming in next week. Well, that's the thing. I think that you know, the QQQ is extremely vulnerable if the earnings aren't just stellar, and I don't expect that to happen. So my guess is the Qs are going to continue to move lower. I would probably be betting against the Qs. As a matter of fact, that's probably not a bad idea. It would be to short the QQQ, because if we take a look at the chart here for the Qs, we've got this downward trend. I mean, you know, there's just no way around it. We're below that 50-day, the 200-day moving average. We're below the 50-day moving average. Now, we are moving down, but then we're moving up. So the overall look on this, well, I'm afraid to say we have a problem here. And I do think that even after earnings, there was some movement up today, but I don't think that we've changed course. I still think we're on a downward trend. So basically, what I would be looking at, what is the ceiling of the Qs? Well, my guess is the ceiling price of the Qs is going to be right about there, right about 335. That's kind of where I'm looking at it. Why? Because it's pulled down. It's going to try to make a stand here because this is sort of the bottom of this consolidation. So I would say that the ceiling on the Qs, at least in the short term, is between 340 and about 330. So that's kind of where I see that's kind of where I see it right now. So 330 to 340 ceiling for QQQ, and let's see if I can get that in there. So yeah, so that's kind of where I see it, is right between maybe about here and 340. So I think it may get a short-term rally up to here, but I think it's going lower. So if you were looking to short this by possibly buying puts or doing a put spread, I prefer a put spread, to be honest. I would be looking to have my upper put at about 340 and then possibly the lower put, maybe, buying the 340 and selling the 330. That's kind of what I would look at to do if I was looking to short the index. And that's kind of how I would be looking to do it. So I think the earnings are going to be, they're going to be some of the earnings on the Qs are going to be good, but I think some of them are going to be disappointing. And here's the thing: in the kind of market that we're in, if they don't just absolutely blow it, look at what happened with Tesla. Tesla had fantastic earnings, and it barely moved the stock. Why? Because there's a lot of fear in the market right now, and nothing's moving. Let's take a look at Tesla just really quickly to kind of show my point here. What you have going on in even really good stocks like Tesla is Tesla had great earnings, but yet it still is kind of stuck here at the 1,000 range, which is excellent, by the way, but that is incredible when you think about it. It's kind of stuck in there, and let's see if we can turn off those. See if I can turn off the comments. But as you can see, it's sort of got this range from about 980 up to about 1010 right in there. So what I'm trying to say is that even the very best stocks that having great earnings, and by the way, Tesla had great earnings. Let's take a quick look at their earnings. Oops, let's see if I can get it. There we go. Let's see if I can. A little bit slow on there on the uptake, but this is the earnings for Tesla. Let's see if it'll. There we go. The earnings were up. The sales were up 81%, and their profits were up 246%. And guess what happened? The stock went down. So that tells you even the most powerful stocks are going down. So I fully expect in the Nasdaq next week, even if we have some blowout earnings, and we should have some blowout earnings, that there's going to be problems. And I suspect the Nasdaq, the QQQs are going to go lower, just because of the overall trend in this market. It's right now there's a lot of fear in the market, especially with these interest rates. All right, let's look at the spider. Thanks, Rachel. Let's look at the spider and take a look. I think the same thing for the spider, but not quite as severe as the QQQ with the Nasdaq. Of course, this represents a little bit wider range of stocks than the Nasdaq. But here's what the thing with the S&P 500: we're definitely well below the 200-day moving average. We pulled all the way down, and we did pull up today, but this is a dead cat bounce. So here's the thing: I believe that we're going to have. Hey, by the way, I used to live in the Bay Area. I used to live in Berkeley and in Hayward, believe it or not. That was not that long ago. I left the Bay Area in 2006. But congratulations! Thanks for watching me from the Bay Area. I really appreciate it. So, anyways, what's happened is we've pulled below that 40-day line, and now it's starting to get the dead cat bounce. So what do I look at this? Well, I think we're going down a little bit more. We're not probably going to see some support probably until we get down probably below 410. So 410, 415. That's kind of where I see the support for the S&P 500. Of course, this is the SPDR. That's the ETF that represents the S&P 500. So I do think that is going lower, unfortunately. Now, Procter & Gamble, PG, this is one of the ultimate bellwether stocks. Typically, a stock like Procter & Gamble will be bought by the funds that have to be invested. They don't want to be out of the market. They don't want to go to cash. I recommend going to cash, by the way, and waiting for better opportunities. But for the companies that can't get all that out into cash, going into something like Procter & Gamble makes a lot of sense. So typically when the market gets weak, consumer staples get stronger. Now, could you buy Procter & Gamble here? You know what? I kind of believe you could. Now, that's unusual for me to say that because I'm saying, basically I'm all cash. I'm not buying anything. But if you were to buy anything in this market, Rachel, this is one that you really should consider. And I think this is very smart that you bring this one up. This typically will do very well in a downtrend. Another one, of course, is KO. That's Coca-Cola. This is basically up 1% from the pivot in 4 days. So it's right at the pivot, and you probably could buy this one. It's not extended, which is a very, very good thing. This stock is not extended. So out of these two, buying the SPDR or buying P&G, Procter & Gamble, actually I would recommend Procter & Gamble because people are going to be, even if we have a depression, people are going to still be using soap. So at least I hope so. So I think that, if you're looking for something to buy, again, I'm not buying in this market, but if you have to buy something, this is the kind of thing you should be looking at. I think that's very smart, very, very smart symbol to pick up there. PG, Procter & Gamble. That's a consumer staple, and they typically do better when the market is falling like this. So very, very good, very good. How much can dog? You know what? I don't know how much Dogecoin can move, but I do know one thing. With this acquisition of Twitter, it's likely to move a lot more than I would have thought. Now, let me see if I can get a chart up. I haven't looked at the chart for Dogecoin in a while. I don't own it, but it probably could double. I mean, it probably could double. I mean, according to this, it was down a little bit after hours on the day. I kind of want to look at the month. Yeah. So basically, here's the thing: you always want to buy something as it's moving to a higher high. They're sort of we're right at 15. This is a key level, so it probably is going to. So this is probably buyable at this time. Let me look at the 6-month chart. Yeah. So this, it possibly could get back up to 25. I mean, that would be amazing if it happened. So it might be bullish. I'm going to have to take a little bit more look on this one, but this chart doesn't look bad because if we go out here to the day chart, we can see it made a high basically at 6 p.m. up here. It was as high as almost 17 cents today. It's down a little bit, but if it can keep going, you want to buy something as it's making a higher high, and that seems to be, at least in the near-term future, with Dogecoin. So I'm going to have to look at that more carefully, but that could be a buy. That could be a buy. Absolutely, absolutely. Let's see on the oil last night. Yeah. Oh, nice. She's in 1 day. It's beautiful. Yeah. I think you're doing great on that stuff. But be careful. Push your stop losses up. Protect those profits because the profits are so hard to come by, and when you get them, you want to keep them. So that's in this kind of market. You kind of got to be a swing trader. If you get into something and it moves up nicely, push your stop loss up. Protect those profits because they will pull back, and you want to protect those profits while you got them because they can be very, very good. Let's look at BOIL. BOIL. Here we go. All right. And this is the natural gas futures. Wow, look at them. They're strong. You're right, Alberto. This is looking good. we're going to be short of natural gas come, um, come winter. That we're going to be short of natural gas, and this obviously made a high here last week, and then it's pulled back up. So looks like it's getting some support at about the $80 level. So here's the thing: it touched the 21-day line. Here's what: if you have this now, I would start moving my stop loss up, and if it pulls back, you'll be sold out. But then you can wait for it to pull back. I do think this is a bounce off the 21-day line, but we will see what happens. We will see what happens next. But this is a good chart, man. A very, very good chart. Considering that we're in a down market, this is a very, very good chart. So for everyone out there, just want to put it out there right now, and that is it's BOIL, BOIL, and it's the natural gas ETF. And it's pro share, so it's good. So yeah, this is for everyone out there. This is BOIL. It's the natural gas ETF, and it tracks the price of natural gas. So one of the good things about this one, if we go all the way out to the monthly chart, you can see we are turning the corner. It has been really since its inception in about 2011. It's been moving down, and then now it's turned the corner and it's starting to make higher highs. This is typically looks like a nice turn, and if it can stay, really it needs to move above 100. But if it can hold 80, then I think it's probably going to go higher. So definitely put this one on your watch list. I wouldn't recommend buying it right at this moment based on the chart, but it could pull back and give us another opportunity. Right now, the where you want to buy this, and this is really tough to do, but where you want to buy it is when it pulls back to this 21-day line. So right now, we are basically, the 21-day line currently is at 73.29. So if this thing pulls back to about 73 or so, that's where you want to buy it, right about here, if you can get into it, because it will bounce higher, because it does look like it's going to make a move. It's probably going to pull back a little bit, and then it's going to continue to move up. But this looks like a bounce. It looks like it's got some support at that 21-day line. So that's looking pretty darn good as well. I really appreciate that comment. That's a good one. That is a very good one. All right, Jay, thank you very much. Facebook sells off last week. What's the support? Oh my goodness. I think that with this Twitter acquisition, I think Facebook may have some difficulties, because the thing about Facebook is I think it's going to go lower. I think Facebook is likely to go lower. Currently, it's a very low relative strength, 11, and it's below the 200-day line, so it's not looking good. What's happened is that it's lost support at the 40-day. The 40-day came down here, so you can see this is the 40-day line. It's going to try to rally back up, but this could be accounted to be shorted. I really believe that, because look at this. Let's go over to the weekly chart. I'm actually looking to possibly short this one, because if you notice, it came up, it rallied to it rallied, and then it's broken down. Now it's going to rally again, but I suspect it may break down right about when it hits that line again. So this one is a potential short, I believe, in this market, and I'm going to do a little bit more work on this. But FB is a potential short, and there's a lot of different ways you can handle this. I like to handle this typically with bear put spreads, because I like to limit my risk on the downside. Let's see. There we go. So I do believe that Meta Platforms, or Facebook, is a potential short. So keep that in your back pocket. I think that that one could be very, very interesting. Here's somebody asking about PayPal long term. Thoughts on PayPal long term? Okay, really, I mean, in the long term, we're all dead. I mean, that was a famous saying. But I think you really ought to be careful with PayPal for long term, because why? If it's not going up, why buy it long? Why not short it? Because right now, the trend in the market, unfortunately, is downward. Let's take a look at that PayPal chart. So you can see we're moving lower. Now, I do think that PayPal is going to get some support right about here. So it seems like, I do expect, 85 or so for it to get some support. But I wouldn't be interested in buying it until it can move quite a bit higher because, it may just go up and then move back down. So right now, I'm not sure that PayPal is getting support at the 50-day line. Now, look, the numbers are good. See, this is the problem right now with this interest rate situation. Even the companies that have good numbers are getting hurt. This has a PE of 19, which is very, very good for tech stock. But yet it's still getting hurt. And it's got a 28% return on equity. But it's still getting hammered. Look at all the selling that's going on here. It's still getting hammered. The reason the market is selling off, the market is moving into cash because right now, with the situation of the market and the interest rates going up, you're going to see stuff go into cash. You're going to see stuff go into cash, and that's just kind of the way it is. In the last few years, the Fed has been working with the market. They're going to work against the market now because they have to get that inflation down. So to fight inflation, they're going to push the interest rates up. The interest rates going up are going to pull capital out of some of the growth stocks into bonds. So a lot of bonds are going to get bought. So very strange market. I would not be a long-term holder right now of PayPal. If it's down more than 7%, consider selling it. Just consider selling it and getting into something that's going to work. That is going to work better. Now, Johnson & Johnson is probably one of the ultimate bellwether stocks, and it is a little bit extended, not too much, but it is a little bit extended above that 21-day line. The last buy point on this on Johnson & Johnson, the last correct buy point, was at 173, and so we are now basically at 185. So we're extended a little bit above the buy zone here. So could you buy this? Well, I wouldn't recommend this stock, believe it or not, and it doesn't seem like it should be, but right now this stock is extended. So another, I have to say, J&J is extended. So watch list. Now, why would I say this? Well, part of the reason is because in this kind of market, you've got to wait until the stock pulls back to one of these lines of support. Now, the most likely line of support that Johnson & Johnson is going to pull back to is the 21-day line. So right now, if you were to buy this stock, you really can't buy it any higher than that 21-day line, or about 180. Currently, it's at 185. So here's what you got to do. You've got to wait for the stock to reverse lower to about 180. And when it does, then you could possibly start getting a position. But until it moves down to about that 21-day line, that's the green line here, I'd be very, very careful about this because it's likely to reverse lower, even though it's a very good stock as well. I mean, everybody's been putting out really good tickers here. It's just this market is a tough market to trade in. It just really is. Question about JetBlue, JBLU. Yeah, let's take a look at JetBlue. Some of the airlines have been perking up, but I am not a fan of the airlines right now because of a number of things, primarily the price of oil and the fact that, it's unbelievable, but they still have travel restrictions in a lot of areas where, the masking is still going on, and they just reinstituted it in Los Angeles and Chicago. Unfortunately, everybody wants to get out of town. I totally understand that, but a lot of places still have mask mandates, and they may go on for, as long as the politicians can get away with them. They like those mask mandates, but it hurts the travel business. And with Zoom and virtual meetings and everything like that, the travel business for business has not been very good. They really have to depend mostly on the leisure travel, and unfortunately, mask mandates are a big deal. So I would not be in JetBlue. I'm sounding so negative, but I would not be in JetBlue on this one. Can we see the chart for UPS? Absolutely. Let's take a look. UPS United Parcel Service, of course. Ups. And let's get that correct. And I'll bring that out. That will bring up the chart. There we go. So basically, this is the chart for UPS. Here's the problem with UPS. It's well below that 200-day moving average. And so therefore, and starting to fade from the 190. So I see this in a downward trend right now. It's got a 57 relative strength. So I just wouldn't be, again, this one, I wouldn't buy it. Anything below that 200-day moving average is a no buy for me. So, I would have to pass on UPS as well. And I hate being so negative here, but I would not buy this one based on this chart. This chart isn't strong enough. And I think it's going to be difficult. By the way, if you're watching on TikTok, super easy, and you want to get on the action trailers, just go to the to my profile, click on the link, first and last name and email, and we'll get you set up on the free action trailers. Amazon is moving away from UPS. Absolutely. It's probably going to, that's right. They're building their own package delivery service, and that's going to have a big impact on UPS. Absolutely. How is Twitter trading? Oh, why is Twitter not trading? That's a good question. Why is Twitter not trading at 54.20, which is the buyout amount? Well, the reason is because there's still some uncertainty, even though the board has approved the buyout. There is uncertainty because of regulatory issues. We don't know what they're going to be, but once those are cleared up, I suspect that the cash price will come up to 54.20. Right now, it started to do that in the after hours. It's at 52. And we'll see what happens after hours. It closed at 51.70. But I suspect that very soon, when the details are known when the exact details are known, it will be trading at 54.20. So that's a very, very good question on that. All right. Well, I basically am running through. Can you please check CNN? CNN. Let's look at CNN. All right. Let's look at that one. And this is one I am not familiar with. This is Senko Electrical Group. It's an automobile manufacturer. This is a terrible stock, unfortunately. No buy. Just run away from this one. This is just not good. Not a viable. So this just isn't a viable stock. This isn't a viable stock. This is a dangerous chart. This chart's below $10. It's below the 200-day line. It's got a relative strength of 5, and it's in group 135 out of 197 pass. Just not a good stock, unfortunately. There, so I don't think that one's viable, unfortunately. Well, everybody, I've wasted about 45 minutes of your time. Thank you so much for taking a look at the show. I'm on every day at 5 o'clock, and then also with updates on TikTok and YouTube and that kind of and those platforms. If you want to get on the action trailer, super easy to do. Just go to just go to www.Dallas Trading Floor and just need the first and last name and an email address, and we'll get you set up on that. Also, if you're on TikTok, super easy to do. Just go to the profile, click on the link, first and last name and email list, and we'll get you right on to the list. We do have a copy of the heat map. These are all the top performing areas in the market, and there's not many of them, I can tell you that. That's available at www.Dallas Trading Floor as well. So without further ado, thanks everybody. I'll be back tomorrow. Please stay safe. The market has moved from a market trend under pressure to a market in correction. We're currently in a market in correction. In a market in correction, we want to close our positions. We want to be in cash, and we want to be building that watch list, because when the market turns, and that's on a follow through day, which I will tell you about when the market turns. That's when we want to be coming into the market. But right now, I'm mostly in cash, and that's probably a good place for you too to be. So I will see you back. Oh, I have one more question, I think. Yeah. How low can the QQQ go? It can go very low, believe it or not, because I do think we're going to get a sell-off next week because earnings, we're in earnings season right now, and I think earnings season for the QQQ is going to be very difficult. We are in a downward trend on the Qs. I can see it. I can see the Qs moving lower. If we move lower than 318.50 right here, I'm going to draw that line across there, then it could go much, much lower. So if we move below 318, get ready because it's going to go much, much lower. So this could easily go. The next support, the next support level for the Qs is 318.50. So that's the next support level for the QQQs is 318.50. So right there. So if we move below that, it's going to go lower. So that's where I expect it to see a bounce. Hopefully we'll get a bounce there, but if we don't, it's going to go lower. So could be very, 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 very difficult. A very, very difficult time going forward. So be careful. Cut your positions right now. If you're down more than 7% on any of your stocks, consider selling and getting into cash and waiting for a confirmed uptrend. I'll be back tomorrow at the same time, 5 o'clock. Happy trading.